They are not convinced that inflation is a worry for them yet. And I think they're probably right. There's all kinds of base effects that are taking place, and certain prices are clearly rising. If you want to ship stuff around the world, that's become a little bit more expensive. But the underlying driver of this all should be wage inflation. And it's difficult to see how after a large pandemic, not even after, we're still in it, how wage inflation is going to come back. So I think markets are a little bit overzealous in terms of pricing in inflation, actually. So, but yeah, that's what the Fed is saying as well. They're still waiting for more inflation and willing to buy more bonds in order to support the economy going forward.
And in the meantime, and this is the crux of the issue, right? If there's no or not much wage inflation, then people don't have much purchasing power. But at the same time, everything that they have to buy is more expensive. You know, shipping costs have gone up, logistics costs have gone up, commodity costs have gone up, housing prices have gone up. Where does this put people? And are there, I don't want to say take advantage of this worrying trend, but is there an investable way to get onto that theme?
Well, I think there's a couple of ways to invest in it. Of course, you can buy into those sectors where prices are moving higher, and that's clearly what we've seen. But also, we got to really think a bit about the broader picture here. So bond yields have risen quite remarkably over the last, say, 12 months or so. 9 months ago, 12 months ago, they were at 0.5 on a 10-year US Treasury. Now we're at 1.3 something. So they've gone up remarkable. The thing in particular for the Asian equity universe is that reflation has been a good story. It's been very supportive to Asian equities, but if bond yields were to continue to rise further because of higher inflation numbers or expectations of inflation starting to come through, it might actually start to become a little bit negative for us, because bond yields are not only a kind of prediction of what happens with inflation and growth, but on the other hand, there's also a discount rate for us in terms of how we discount future profits. And if those go up, it means that could be a little bit negative for equity. So we're a little bit into this kind of in-between land, if you want to put it like that, whereby we've had all the positive effects of this reflation story, and I think we're hitting a level whereby some of it is starting to become a little bit negative for Asian equities.